Wednesday, December 11th, market analysis, Stan Ehrlich at 10:12 California time, a few minutes, 10, a little late today starting. I always start out with the E-mini and the stock market indexes and go to futures, interest rates, petroleum, precious metals, grains, meats, a few others. And I have some, what I think is very profound comments about the grain complex today in particular. Excuse me. And also the stock market indexes, frankly. Now, what have we got here since August? Basically, we have either upper slanting channels or wedges. They're very similar. They're close cousins. A wedge simply has an end that comes to a point together sometime in the future. And if you separate that point in the future, you come close to a parallel lines, a channel. So we're close to the top of this wedge because you can see the bottom comes up a little faster than the top, but not quite there. But we're also overbought. And those combinations, and I'm showing you more accurate ones in a moment, imply that the market might have trouble at these levels and have some sort of a downside dip, which, hey, last couple of days it did. And today we're shooting right back up into that same ballpark price level of which we've topped out at over the last week or so. Danger zone. So I'll show you the detail in a moment. Although I am still bullish, there's not any doubt in my mind about that. We're trying to figure out if it's going to have a downside correction in the next couple of weeks into the Santa Claus rally beginning, which is 1, 2, 3 trading days before Christmas, Wednesday in this particular case this year, the 25th. So it'd be Tuesday, Monday, and the previous Friday. And when do you get out? Well, I'm going to be telling you this Friday in great detail and showing you the historical track record also. Enough of that. Santa Claus rally momentarily. So I'm bullish, but there should be a correction between now and then. And I'm basically expecting in the next couple of months new highs in general per month, each month. I don't see any blow off top. There's plenty of elbow room in this pattern. It keeps on making higher highs, and the downside corrections since August have been significantly higher in the past, or they held at the same level. So the worst case scenario on a correction could be down at 57.25-ish, but I'm thinking it probably won't be, and it might hold at 59.25-ish for the E-mini. But I'm very, very, very cautious right here. It's right back to where it had problems only a few days ago, and here's the next chart. There we are, pretty much high and last right this moment. But that's what it did 2 days ago and the day before that and the day before that around these prices. And look at the speed at which it has just rallied in the last few hours. On that start of that, it got way up on this 5-minute RSI to 95. Doesn't happen very often, and the last time it did, it went flat for a bit and had a small correction, but not big. It's just at 95 you don't see very often. Implication, just be careful here. Could start to turn down. Let's go to the next one. And a lot of these comments I just made about the E-mini apply to the other indexes in general. Spider in particular, very close to where it topped out a few days ago, close to the top of the channel or wedge. This is really a wedge, very long, elongated version. Overbought a few days ago, pulled back a little, and now will pop up real quick, right smack in the same damn area again. And up a healthy 5+ points at the moment, high and last, basically, which is a fairly big day lately. Also, next, Spider 5-minute data, right up to where it topped out a few days ago. Now, that's not a real gap because it didn't stay above the previous day's high. So it just almost was, but not quite. Look at the QQQ. We are at the top of the wedge. In fact, we are above it. This upside breakout potential is what you might see before what's called a blow off top, and it just jumps like nuts for a day or two and gapping up off during that process also. But heck, we don't have that. I'm thinking it's going to close back down at or below the line, and we'll be trapped back into the upper slanting wedge. Nothing long-term bearish about that. It just looks correctionary in the process. Plus, there is a gap to close. This QQQ does have a legitimate gap. It tried to close at yesterday's lows, did a little bit of it, and then turned up real quick. So I'm cautious here. Next, you can just see it high and last right now. And normally this is very bullish, but there's some bearish parts of it that I'm a little concerned about at the moment. But on the average, next after Christmas, new highs. January, I expect new highs for the trend. Next, NASDAQ, same thing, right up there at the Qs, at the line exactly. The Qs were above a little, but the NQ is not. So it's right smack at where it might. Watch out, stop. Let's look at the detail. Don't see a darn thing bad about this. Maybe a tiny loss of momentum, but gosh, that's just too, last 30 minutes, too tight to call. So it had to come down an awful lot. If per crazy chance it got below yesterday's lows on almost every one of these indexes, we would have a gigantic bearish engulfing, and they do happen. But again, we only got a couple hours, so it has to be whopper of a break. Some kind of really bad news all of a sudden. Anyway, here we are with the Russell YM Dow Jones. It don't care. It already topped out. It's been making new lows for several days now. It was at the top of the channel, so it's leading the way down. As a matter of fact, I wouldn't be surprised if the other indexes look like this in a week or two. This has already just started a week or two early. Same formations, same overbought conditions, same kind of thing. So we're right about there. And this is showing you what? The future in 2 weeks? I don't know. It looks kind of strange. Here's the Dow 5-minute chart. Topping out. The last time it got up close to or around the previous rally highs in the last week or so, it did exactly what I'm saying or implying that the spider, and the other indexes that covered are going to do. So let's see what happens. We got the Russell daily data, but I've got 3 years showing to you. It went up to the top of its channel. It topped out in overbought condition and at a major historical multi-year resistance level, which I've had on these charts probably for 2 years or more. Smack dab at that level. Great. The only thing I didn't, and an upside exhaustion gap the day it did it. Classic. So the only thing I don't see here is the expectation of maybe a move down to 2283, and then you got that bull trend line to fiddle around with at the time, and it will be going higher every day. So maybe only back to about 2309, 10. But near the bottom of the large or gold, yellow, whatever area here. And pay attention to the line and pay attention to the horizontal bottom of the support. But this whole thing is a giant multi-year resistance level. The next time we close a new high ground, it's super bullish long term. Next, we got the Russell 5-minute. Now, bonds at support near the low of the day. We've had 3 days down now since the high day, which was in resistance and overbought. So I'm not oversold at the moment. I'm not worried about that. I am at a support level, but I can see it dropping off a little bit more, 17, a little below 118. And in fact, maybe even a touch more than that, but it just shouldn't, I don't think, get below 117, let's say. And anywhere, especially now, with today's low being right smack back at support where it was a few days ago and bounced, it could do it again right here. So I'm not going to be surprised if bonds start to rally and make new highs for the trend soon. I just can't see a lot lower, maybe a bit, but then up and new highs. Same thing for 10-year notes. right smack at the bottom of the trading range. The reason I'm showing you so much data is this giant 2-year double shoulder, head and shoulder bottom formation is working fine. And that includes the last couple of days with a dip. That seems very normal after being overbought. So looking for new highs soon and not much more, if any, to the downside. Next, crude, still between a rock and a hard spot, getting up to resistance and stopping. That's the last couple of months. And that top end is 72.80 down to about 71.60-ish. So it's topped out 3 or so times. And when it got above it, it was a healthy amount, but it had a gigantic bearish engulfing sell signal. So we caught the last important top exactly to the day. Didn't get down that much that far. So anyway, support has been doing fantastic. And the longer term picture does look a little bit on the upside, but also on the downside across tops. This is a gigantic triangle, maybe. That's exactly. So, and you can draw the line across this low instead, and you still got a triangle. Doesn't really matter. Just a little bit wider. So up above this, you get bullish up above 72.90 and below 76.37 could at least drop to 63.35. And below that, you've got a pretty big void until finally, what, 56. So that could be a bit more bearish. And I can't really make a decision at the moment. So I'm between a rock and a hard spot and just to shut the heck up. Next, heating oil. Pretty similar, but the favoritism is breaking the support because the tops are coming down. We're in a down channel. Resistance has done its job a few times here lately. I don't trust the rally, and so I'm voting for lower levels, but there is a little more strength in the meantime to the resistance level here at 2.27 possible. Neutral to bearish, and if we break out to the downside, a lot more bearish. Natural gas, definite downtrend. We got the last rally high to the exact day. Support's holding, but you could make a story, you could make a case for this being the bottom of a head and shoulder bottom that's got another month or two to be finished. This is the first shoulder low. Maybe you want to call it a double shoulder. There's your high, there's your neckline across these two bearish engulfing ER sell signals on both highs. Thank you very much. Oh, yeah, we got this bottom and we got this bottom. So, gee whiz, all 4 of the last significant turning points I had signals at so far. That's not easy to keep up. So, resistance at the moment, that's where we are. Trend line is going to stop the rally. We're not overbought. A little more elbow room, and let's see. I wanted to talk about that double shoulder, and then this could be, although it's a little early time-wise, the first shoulder and another one off into this time frame, something like that, or maybe even over here. What is that? End of January. So let's see how it bobbles around in this big range that started and maybe form some kind of formation. Right now, there's a chance, but it's stage 1 out of stage 5, so it's a long way to go before it looks a lot better. The upper slanted neckline slightly, I'll just draw it in right now, is not that much of a problem because a lot of these formations do have upward slanted necklines, although most bottoms do have flat to downward slanted, 60, 65% of them, 70. Next chart. Gold. Looking sort of toppy, but look, we're almost overbought. We're in the ballpark where it's topped out before, so I could see it pop up to maybe 28 and stall out. But that's got to be today or tomorrow, pretty quick. Then we're going to be overbought at a recent high and expecting some sort of retracement. The bad part is my head and shoulder top I've been yakking about for the last several weeks, couple of weeks, is now seriously in jeopardy. I don't feel like erasing the neckline yet in the downside objective, but it's got a long way to go down to break out, and this is higher than I expected for the last shoulder, and a little bit more time-wise to the right also. Negatives if you want to hold on to the concept of head and shoulder top, but not good. Okay, so I'm about to probably stop talking about this and go into full-blown neutral to bullish mode because of the longer-term trend. It just looked like something had been, and that may be true, forming, but going bye-bye. Silver, similar. There's your neckline. I'll just spread this out some more, but obviously the long-term trend is still up. This rally is in resistance and overbought today. Gold almost. Another little pop-up for new high ground in both gold and silver would keep them or go into, like gold, overbought conditions in a resistance area. So this looks like it's probably about to hit a high and turn back down a bit, in which case this head and shoulder top is still viable. A little extended to the right for the last shoulder, but the price range is not bad. The first shoulder was at the top of resistance in the first place, and a little double sort of. So right around 33 and a half is be very, very careful time. Get out of longs and or go short, maybe. Next, platinum. I don't like this head and shoulder top. The last shoulder is very stunted, down a lot lower than you would expect. The first one was right in this price range, 10.29. These shoulders are just not very high. They should have been closer to the bottom of the resistance area. The only good thing I can say is we did get the sell signal at the top of the market on platinum, exactly, October 30th. And we've almost made new lows since then. And if we're right about the pattern, great. The sell signal would have made longer term, obviously, a lot more money. But support so far is holding. We really, really, really have to start to get below 927, and then it should start to tumble. Break out of the formation, break a historical resistance level, and just start to break down to the objective of 788-ish. I don't want to see numbers above 966. That's starting to ruin things. Anything around here for a little bit more time or lowered would start to make this pattern look a lot better quicker. But you're sideways here for 2 weeks. Next, high grade. We're stopped out today of our previous short position at the high day, the top of the market, which was 9:30, September 30th. Too bad we didn't get a signal up there. We did get a buy signal down here, I remind you. And we got a sell signal on the top of the market way back on March 7th of 22. These are gigantic long-term investor type signals. I'm sorry to say it, my signals are not always that profound longer term. Sometimes only for hours or a day or two, but usually longer. Okay, so what now? Support is held very, very well. Got oversold, right in support. One of my favorite combinations. Tested, passed the test, new high ground, rallying nicely. I think it could probably come up to 4.45, 4.5, maybe 4.6, maybe, or 4.455. This yellow resistance level, not out of the question at all. Might be a little burp on the way up, a dip down. Next, grain complex. Pay attention. I've been watching the support area. It's not getting broken. My previous sell signal is almost a loss. I can't lower the stop because I would screw things up. So I'm going to take a little loss on this, or it's going to go down and break out to the downside, which is slowly looking like it's not going to happen. If the support area does hold and we start to make minor new highs and we start to make more important longer term new highs, especially if you can get up above 1043, then you'll be breaking a major long-term bear trend line. You'll be overcoming a resistance level, and that could cause the market to go up a chunk more, all the way up to probably 1111-ish. Yeah, a little bit above 11. That starting a long-term bull move, major bottom formation, past tense. That could cause the market to trend even higher and higher up to, I don't know, 12 and a half, 13, 13, 15, 1400 over a year or two or something. Something to think about. Previous lows in August weren't broken, formed a shelf of support that's very unusually flat. And there's a little bit of strength creeping in slowly here. So this is really, really early. Now, what have I got to say about this in soybean oil? I'm afraid when we had support starting way back in May, late April, yeah, April 30th, it held, bounced, it held again, bounced, but it got broken, but it didn't go down for very long and not too far, and finally bottomed out in severe oversold conditions, way down to in the teens. So it bottomed out, held on the next move down, didn't make new lows, made some minor new highs, a little overbought. We got a couple sell signals around the resistance area, but the pullback didn't go down much. Then you made another set of new highs. Yeah, we got a sell signal on the top of the rally. But you're making new highs for the whole year. This pullback has held almost exactly where it did in May, June, about a couple of weeks ago, and it started to make slightly higher highs. I'm in a resistance area, but this is the fourth day. If we can start making a little bit higher, 43 and a half, 44 and up, this is going to look like major longer term support has held pretty accurately. And you could end up attacking this resistance rally highs we've seen, and you would start to talk about that being a neckline. Double shoulder in here, or a big flat one, whatever you want to call it, but it bottomed out. You've got your lower low, and approximately the same amount of time later, you've got these two lows, or you could call it one low, but it's the low. And it was above the bottom of the market. And now those are called shoulders if the whole thing works correctly. So I'm starting to come back again with these bullish commentaries, intermediate to longer term and short term. I think there's a little strength left. What about wheat? Well, I'll be meal, soybean meal. Almost the same comment. I'll be damned. Major historical support. Held in the ballpark area twice before. And we're going back to June of 23. Top of the support, it held in October 23. Bottom of support with bullish ER buy signal on the exact low day, February of 24. Held again, April 24. Kind of pretty damn close, August of 24. And here we are again, holding over the last 3 or 4 weeks at around very close to the same levels that we did in June of 23 and March of 24, and now in November, December of 24. That is called a triple bottom on a very long-term base if you start to trend higher. So we're going to have to overcome some minor resistance at $3, 300. And we're going to have to overcome this trend line. And we're going to have to get, well, I'm going to say 310. Now we're talking business long term. But that remains to be seen. Right now, you are oversold at support. Historical support is holding. Let's see some follow through the upside. But here I am, again, talking some bullish potentials long term. Obviously, if we make new lows on a closing basis below 285, everything flip-flops back to bearish. You just have to watch if these exact lows do something to the market next, the next round. Next, we do have a bullish breakout in corn. Look at this. My head and shoulder bottom I've had on this chart for weeks. Here, the shoulder, buy signal in the low of the shoulder. Bottomed out, unfortunately, not quite oversold, but super, super, super close. And these two prices are exactly the same tick from one day to the next. So if you made a lower low on this day with the RSI being so close to 25 on that day, same day, you would have had, more likely than not, educated guess, oversold conditions and a lower low and an outside up day, bullish engulfing, which would have turned green because that's what my ER signal strategy does. It didn't quite make the grade, missed by one tick, and I think it's 13 hundredths of a point in the RSI scale for the exact numbers. Anyway, so close. Then again, you have a low, but that's not a lower low, and you got an ER buy signal and a very low. We got both shoulders, ladies and gentlemen. If this pattern continues to work, and we just broke out of it yesterday, it's working. The last shoulder was a little more extended to the right than I would have liked. Usually this date, November 8th, was just right for an upside breakout like we've been doing yesterday and so far today. But it chose instead to dribble back down a little bit, but it didn't make it lower than the last shoulder. Didn't even come close. It held for a month. Frustration. And we got a bullish engulfing on Thursday, I think that was, of last week, and that was it. Friday went up. Monday went up. Tuesday you went up, and today we are up a little at the moment. New highs. This is a breakout on a head and shoulder bottom formation that is pretty good, except the last shoulder is a little extended. Neckline is almost flat, very, very slightly upward slanted. Minimum upside objective at probably 2 or 3 months from now is going to be 492. And that is the minimum, I repeat. Technical analysis formations, wedges, channels, head and shoulders, pennants, cup and saucer bottoms, which is really kind of a head and shoulder anyway. All these patterns create objectives that are minimums. They can, and many times do, start longer term trends. Not just 490-ish. Okay, what about wheat? I'll be damned. We have a bullish engulfing on the low of the move in August 27th. We came within, I think it's 3 cents. No, I think it's a penny and a quarter of the exact same low that was back in August, and we just did it last week on the December 4th. It didn't look important because the market didn't have a bullish engulfing. It was oversold. The close was a tiny bit higher than the previous day, that is. But we popped up dramatically the next day, then rested for 3 days. And today, here we are, a new high ground again. Up a little, not a lot, not huge, but this is what bull markets do. They don't climb that fast. Bear markets go down like crazy. They panic. They go down 2 or 3 times, 4 times maybe, then bull markets go up a lot faster. This is a broad double bottom formation over several months. From a long-term charting standpoint, that's not too big. It's medium size. And because it's only 5 ticks difference in price, it is incredibly accurate price to price. Now, what I need is for the market to start chewing its way on the way up and no major downside corrections. And we keep making new highs and keep getting up overbought a little bit, turning down, getting overbought again, a new high ground, breaking through resistance areas. The classic bull market stair-stepping its way up routine remains to be seen, but that's what's about to happen, maybe. Cattle. We're at a historical resistance area. We're up a lot today, a little bit indicative of a blow off top, since you were also up a lot yesterday. RSI is almost overbought. We might make new highs, but will they hold? And if there is a correction, will it hold support, which is now going to be tagged at 191 and a quarter, which is around today's high, 191.35, same thing, basically. And if the market does continue to stop here and turn down, resistance will have stopped the rally, and we're going to see a lot lower levels real quickly. That's a pass on that phone call. It's nothing. So the look of this market is topping out. Overbought condition, almost. Resistance area, definitely. Good historical evidence of it. Going up too fast, too quick. A close above today's high, especially if it's a goodly amount, would be construed as an upside breakout. So you're at a very, very critical point here. It's going to turn down immediately from here. Or you want to let it go up a little bit more and trust the bullish breakout and buy it with a close stop underneath so it doesn't fail and you don't buy into a bull trap. Next chart is the Hoggies. Miss Piggy got to the resistance level, got to that resistance line, got overbought, turned down 2 weeks ago. Unfortunately, no signal on the high day. And yesterday made a new low by a chunk and a couple of weeks. Today is kind of resting down a hair, no lower low. I think we're going to easily see 82, 80.82 and maybe dive down into this support area quite a bit to 77-ish. Next, SQ is the only stock I've been tracking now for maybe a month or something. Doing just fine. Have no problems whatsoever. The big picture here is a huge 2-year bottom at a historically profound support area that goes all the way back to 2018, early 2018. Actually, I think it goes back a little further than that. Yep, I'm going to have to go back to November 21 of 2017. So if you drew a horizontal line from there, you got a bounce off, broke it, but that was the bottom. Excuse me, in a new support level. Same prices bounced off of years later and again and again and again. Now we're seeing new highs for 2 years. We see downside corrections that are short-lived, few days, a week. They don't go down very far. We had the major breakout on the close of November 18th. Bit of a dip, back to support, okay. New high, bit of a dip, closed a little tiny gap just yesterday. Okay, coming up almost to a new high close. My minimum upside objective is pretty substantial. At a minimum upside objective, I've got 135-ish. And I'm not going to be surprised to see something like 180 because of the historical major previous top formation that this has had a few years ago. So this is probably my best one, 191. Let's see what we're doing with the E-mini real quickly. And it's still there. It's right at that resistance area. It hasn't gone any further. On the other hand, it hasn't gone down much either. Yep, we're still up 5.3 on a spider language or up 53 on E-mini language. You have a great day and profitable trading to you.